Hey everybody, Boris speaking at Forex. Welcome to Weekly Technicals for the crosses for August 19th to August 23rd, 2019. The story in the crosses land this week should be like everywhere else, a relatively quiet week. We are in the final doldrums of summer, the dog days of summer, and certainly in the Northern Hemisphere where almost everybody is on vacation into the final couple of weeks of August. Very little on the economic calendar to really make things hop. Of course, there's always a possibility of serious headline risk, and that's always a risk, but generally assuming that things are going to be relatively status quo, it's unlikely we're going to get to see a lot of range expansion. So we're really trading here on the big thematic moves that happened last week, which is the weakness of the Kiwi, the strength of the pound. And to that end, I have a couple of ideas here for you guys to consider. So first of all, Kiwi CAD. Kiwi CAD now is at this very, very critical juncture at the 85 support level. Now, it's not quite a sell yet, but if it trips that 85 to the downside, either as a function of Kiwi being super weak and getting sold at the front of the week, or Caddy really picking up some strength. Either way, it's going to look like an outperformance move if we get a trip through the 85s, and that opens up the full move to the downside, possibly even 84 as the week proceeds. So this is a intra-cross, calm dollar cross trade of strong versus weak as we start the week that I think is kind of interesting. Now, the other big story, of course, has been pound strength and also, in many ways, euro weakness. Euro really hobbled into the end of the week here as the market is starting to be concerned more and more about the state of the economy in the continent, especially in Germany. This week, we have one very important key event, which is the PMI data coming up on Thursday. Now, the thing about this PMI data is that the market at this point really is not expecting any kind of a bounce, but even a even number would be okay. But if we see further deterioration, if we see further declines, especially in manufacturing, that's going to weigh very, very heavily on euro and provides even more scope for that serious euro-pound correction we saw this week. Now, euro-pound basically rejected the multi-year highs at 93s or the multi-month highs at 93s, and it looks very ugly on the weeklies. It's going to look ugly on the dailies. And the point being is that now, even though it still remains in an uptrend on a long-term basis, it could easily come down to 90s just on this euro weakness and possible pound strength. Pound data has been surprisingly robust despite all the Brexit talk. And now there is sort of talk now of concerted Labour, Social, Lib Democrats coalition to try to prevent a head-on Brexit. So it'll be interesting to see if all those flows push us lower. It certainly looks like screaming that pound wants to break the 122s. That, of course, puts euro pound right back below the 92s as we go forward. And then pound Kiwi is simply a marriage of this whole relative strength, relative weakness trade. We'll see on the charts. It's not that there's much really driving it, but on a fundamental basis, but on technicals, it looks very good. It looks like it's ready to bust out towards the 190 as we go forward. So let's take a look at the charts here, and we can start actually with pound Kiwi first. You can see very, very positive bull bottom here above 20 SMA. Now, we still remain on a long-term downtrend, but the fact that we're above 20 SMA, not just for once, but really 1, 2, 3, 4, 5, 6, 7, 8, 9, literally full 2 weeks above a 20 SMA is a positive signal that I think forces are realigning towards a more constructive move in the pound Kiwi. We stopped short at around like 180, just ahead of the 189 level, and that puts us clearly on a path towards the very big 190. Let me just get rid of this. You can see the numbers. The big 190 round number support. It got rejected there once, but the second time could be the magic time where it busts through. Either way, from here to there, there's still some scope here for upside about 100 points, and it looks to me like a strong momentum trade into the start of the week. Euro pound, and I think this is actually worth, let's take a look at this on the weekly because it's going to look so ugly on the weekly, we can really see it. So here's the weekly chart. You see this big weekly reversal off of the very big breakout candle last week. We reversed. Not only did we reverse, but I believe, let me see, what's the low here? Low was 91.29, and we close at 91.26. So legitimately through the lows, not much, but through the lows. Still ugly enough to basically consider this essentially a reversal move. With, and if obviously, if you're being super cautious, you'd have to use the top of the candle here at around 93.35, 93.45 as your terminal stop. But it's certainly, after how many weeks is this? 1, 2, maybe like, I can't even count, maybe 10 or 12 weeks of positive green candles. This is a first negative red candle, and that generally provides scope for further downside action towards the 90 level. So I really like this trade on a lot of levels because I think the PMI data is going to be pretty horrible into the week. The market is going to certainly anticipate some of that. And if we get any kind of concerted opposition to a no-deal Brexit, it's only going to push the pound on a more vertical level to the upside, and certainly push this towards the 90 as we go forward. And then the last trade here, let me just pull this up. I think I have to do it manually. So this is the weekly charts. We can go, let me get rid of this. Let me go on the daily chart so you guys can see this a little better. So as I noted, here's the key support at the 85 level right over here. It's not quite there yet, but this break at the 85 really opens up. There's nothing underneath here until we get all the way down to 83.20. I mean, there's 100 points worth of vertical moves to the downside here. So it's a punt at this point, because one of the things I hate doing is I hate selling into support. You really want to see the support broken before you want to sell. So this could be one of those very dangerous trades where you just sell into the bottom and then it turns back around on you towards 86. But having said this, I don't think it's going to be a hard reversal to the upside at this point. The Kiwi has gotten after the cut by the RBNZ and the fear that China is really going to slow down on a consumer front. It's facing some pretty significant headwinds at this point. So whatever bounce we have should be relatively minimal, and that provides us with scope to move eventually below the 85s. Through the 84s to go forward. So I would wait for the break to happen, but certainly if you're willing to punt with a relatively modest stop of around 86 at this point, you should be maybe 86. If you give yourself a 100-point stop, that's about as much as you want to give yourself on this particular trade, so it doesn't retrace against you. Regardless, this looks to be like one of the more interesting momentum trades if it does break the key levels. So that's how the week shapes up. It's really pound strength as the primary driver against which you sort of trade, and then the secondary idea here is the Kiwi weakness. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.